4th फ्लोर पे आना है अदानी इंस्पायर में, जिसको भी आना है आ जाओ साथ में बैठो शो में. Hello guys,
खाना नहीं मिलेगा. Anyway,
hello guys, thanks so much for tuning in, and please like, please subscribe, and after 20 likes, 25 likes, 30 likes, whatever whatever Sanika, Anupama and Hersh decide, we will go with the questions as well. But thank you for tuning in anyways. Today we have Anushi. Anushi, how are you?
I'm good. How are you? Excited to be here.
Thank you. Yeah, it's a show that is
Yeah.
great. It's a combination of everybody, right? It's a participative show.
Yeah.
So therefore it's fun. But okay, let me start off because I had a lovely conversation yesterday with S. Naren of ICICI Approved, wherein some of the things were funny and hilarious, because he's saying, okay, we are telling investors that equities are expensive. They are saying, we don't want to hear that. Don't tell us that. ये बताओ क्या लेने का, भले महंगा है. So Naren, being the classical investor, made a point that the risk-free rate is 6.3. So if you get 10% returns, you're getting 1.5 times the risk-free rate. Conventional investing details, that is a good return. And he says, investors say 10%? What kind of a return is that? So he was in this mode when he was saying that after telling people so much about asset allocation, कि भाई बहुत महंगा है, asset allocation करो, gold, silver have done well. People got so tired of listening about asset allocation from us. So then we said, abhi aur kya bole? So therefore we are now getting into momentum investing, because this was the interesting piece. He said that in a late cycle market, you can't buy value because you don't find value, and whatever value exists, it's deceptive, right? Because it may not be actually value.
yes.
There's a reason why those stocks are cheap, at least some of them, not all of them, some of them. So he said, therefore you don't buy value, you do momentum investing, because earnings sectors which are seeing earnings growth keep on delivering earnings growth, and therefore keep on getting the multiples higher. So you buy momentum, chase it till the time you can, and get off it just when the momentum reverses, which is when the earnings disappoint. So बाद में थोड़ा hit भी लेना पड़े, so be it. So he believes that that's the cycle that we are in. But it was interesting. And it was also interesting.
But what about Smith now at this point?
No, he's not. So he's saying that there are select pockets which will do well, but by and large, they find safety in large caps. And it was interesting because I was having lunch with Naren plus 3 fund managers and Animation and the whole ICICI Approved gang. And there is a multi-asset fund which is 65,000 crores. There is a hybrid fund which is some 45,000 crores. There is another fund which is balanced advantage fund which is 65,000 crores. Their sizes are so large and they manage so much of money that some of the insights that they would give, which they don't, by the way, because they say that now they are so careful about talking about anything which could be wrongly misconstrued as talking about investing while not being recorded, that they avoid talking about anything, a form of investing currently. But they're just broadly talking about what do they think of the economy, etc., which was all very, very nice to see.
Just a question on that. A few months ago, the narrative was against the mid companies as well as against momentum investing also. Like that was the bet that we saw in September to December. People were against the notion of momentum investing. So now it coming back in picture sounds interesting.
Well, also that they are launching a fund. Typically, when a mutual fund AMC launches a fund, either they are very early or they may be slightly late. But I think in Naren's case, if he's saying that this is a market which will reward momentum investing, one should take notice because he's S. Naren. I mean, it's just oodles and oodles of experience. So therefore, that was one very nice thing. It's a nice interview. You can log into it. And I don't think we have the interview right now to drop it because it's not published entirely on YouTube. If it is, then we should drop it. But otherwise, tomorrow in the show, we'll definitely drop the link to the interview. You guys should try and see that.
Does he talk about what he likes?
Yeah, briefly. So he said, we love...
Except large caps.
No, he said, we love hated sectors. जहाँ पे इन्वेस्टर थक गया है और बाद में बेचेगा
पर कहाँ है hated sector वो तो बता.
So he said 5 months ago it was oil and gas. Nobody wanted to touch it. We bought into oil and gas and it's worked very well. So he said it's not across, it's not a sectoral approach, this one. It's a very stock approach. There are very many stocks in which investors are, after 2 years of holding and getting tired, they are saying, chodo, let's sell. So we are getting opportunities there. That's what he said. Obviously, he'll not name them. He can't and he won't, because if he's buying, he'll definitely not want the street to buy. So this is a big thing. And we had a couple of other interesting voices very quickly here before we move on to specific topics. Chetan Aya of Morgan Stanley, Jahangir Aziz of JP Morgan, both noted economists, both spoke about one thing, that this trade war plus etc., will make it difficult for Asian economies to display growth. And yes, earnings growth and economic growth. So economic growth and market may not be too correlated, but economic growth and earnings growth at some point of time will have some correlation maybe. And therefore, they say that one needs to be a bit cautious about this. Just that word of caution. Remember, economists by nature are
He's
conservative
said to
and cautious.
boost domestic stimulus also, like he expects more of
Naren also said that.
Yeah, monetary policies and fiscal policies.
Monetary policy, they said, everybody's saying that we've done enough.
Yeah,
I think they say that maybe a little bit of fiscal push around maybe GST tinkering or some bit of specific sectors which might need. So there they are saying that usme thoda push.
Right.
So that's one thing.
But so two things. One is pharma, and what's causing the riot in pharma today, if I can call it that.
So
after tariffs, who would have called this?
But
please tell me.
We spoke about it in the morning. In fact, a part of my, I'm not saying I told you so, but my part of my trade setup was that if the index were to start off lower, if it did, it will see buying. And the reason is because one, Donald Trump or whatever, the US has itself said that this will be a year and a half that it will take, and they are willing to take comments and try and see. So kal to lagne nahi wala hai. So why get that sentiment? And remember, sector yesterday came in. So somebody thought something might happen, whatever it is. The sector yesterday got punished. 3.5%, 4% down for most pharma names.
Yeah.
So aaj bounce back hua.
Some bit of recovery today.
I think that's what's happened.
And copper?
I'm not an expert. I don't know if either of you are. If you are, then please.
No,
give
but
I
did a little bit of reading.
So I'll just tell you what Rakesh Arora said. But if you've done a bit of reading, then
no. Okay, I should go first. Okay, so whatever little I understand of this, and basis whatever conversations I've had, basically the US has stockpiled copper prior to the tariffs being implemented, or rather, it's still not implemented. But I'm saying prior to the announcement itself, there's been a huge stocking in the US with regard to where copper is concerned. So what's happened is that supply chains and warehousing, which used to be global, has now been redirected to the US. So all the copper, supplies are currently sitting out of the US. What this has led to is it's led to a spike in copper price over the last 6, 8, 12 months, right? So we've seen a sharp spike, at least in the last few months, with regard to where copper is concerned. So that's point number one. But what does this lead to? Now US is sitting on copper inventory, which is at a 8-year high. So 2017-18 was the last time when we saw this kind of stockpiling of copper in the US. This will take care of at least 2 years of US consumption of copper. Okay, but there is a deficit everywhere else. Okay, so to plug that deficit, likely either the US sells a little bit of its copper, or the US continues to keep no tariff impact. Whatever is getting produced elsewhere gets sold in the world. But US is a big importer of copper. So around 50% of US's production of copper is through imports. And therefore, when you're importing such a large quantum from the rest of the world, that import is going to stop. So the sense is, because of that, you will see a fall in price, because now supply will exceed demand. US has done what it has done. Likely either it will be a seller or it will be a holder. Either way, there will be an excess, and therefore you're seeing a little bit of a fall in copper stocks, likely on the back of a likely fall in copper prices, even though that's not happened, at least on the US exchange as of now. Copper futures haven't fallen. They've actually gone up.
Would it be right to say that current impact on Indian companies on these copper prices would be too early to point out right now? Like, what would be the direction?
No, so my understanding of even your conversation today morning was the fact that you will see an excess supply of copper over the next year or so versus demand. And therefore, in the medium term, you will see a cool off in prices. But for the moment, you might see a spike. I don't know if you have a view.
Near term, US imports might continue because ahead of the tariffs coming in, there might be a lot of exports to US and a lot of imports into US. But eventually, it will settle down because the demand outside US is also very high. China is, as Rakesh was saying, set up 105 gigawatts of solar capacity in the first quarter alone. That's massive. And therefore, the demand for copper in those. Plus, India's solar capacity addition is also looking strong. So I think demand might be stronger elsewhere. So could be interesting to see what happens.
Yeah, but 4% down Hindustan Copper.
Yeah.
Didn't see that, frankly, but that's what's happened.
Yeah.
It's part of our 11 stocks, but didn't see that.
Okay.
Didn't see such a large impact.
The other thing is, I don't know if we don't have the feed right now, so I can't see it. But there is Anushi, there's a lovely real estate chart which I thought I wanted to highlight. And since you track this, so come in on this as well, right? And the chart is from a Motilal Oswal note. I'm believing we will be firing this chart right now, so I'm going ahead with that assumption. Sorry, I can't see the feed right now, but that chart shows that how in the tier 1 cities in India, the absorption has been much higher than the launches. As a result of which, maybe the inventory might have been getting a bit depleted, at least in tier 1 of maybe premium properties or otherwise. And therefore, even though we are in the 4th or the 5th tier of this upcycle or the 4th tier of this upcycle, there might be not reason to panic because this time around it may last for a bit because the absorption is strong. What have you heard from real estate companies about this?
So even in the previous quarters and from the reports that have pointed to the inventories, now while they have seen that, realizations, they're saying that there might be some bit of cool off in terms of whether growth had been as compared to the post-COVID scenario. Inventories, if we compare it with how the launches have continued to remain on the lower side. So considering both of these metrics together, there's not much of a need to panic. Even if you look at the launches on how they have been, you just pointed out that FY25 in terms of launches, it was lackluster. But FY26, if you just look at the kind of launches from Godrej Properties or even Prestige Estates, now there have been easing in terms of where the approvals are. So they are seeing about 20% of an overall growth, especially in the tier 1 cities. So something that we should keep an eye out for.
There's plenty.
Sorry. Yeah. No, go ahead.
There's plenty of chatter around this Delhi real estate.
Yeah, the prices here.
So short question is, what you're saying, does it apply to Delhi, Gurgaon, NCR region as well, or that's just rest of India and Delhi
So
NCR?
Delhi, the main concern has been on the kind of price realizations.
Yes.
They have been on the much higher side. So in terms of where the launches have been for this one particular, they are seeing some bit of that demand kind of stabilizing, considering that the prices have been on the much higher side as compared to like a Mumbai or a Bangalore market. So Delhi is something that we should be watching out for.
So that's a place of concern, is what you're saying. But outside of that, realizations will hold up.
Yeah, they're saying about a single-digit growth or something as compared to a double-digit growth that we've seen in the other key regions.
Yeah, I was speaking to Arcade as well.
Arcade,
India Marketplace,
and
the day you weren't there, and even he was suggesting that pricing is holding up. You heard the conversation? I'm not so sure, but pricing is holding up basically. Very, very bullish. They bought Filmistan, and that's around a 2,100 odd crore GDV. If I
what is
recall
Filmistan?
It's a studio
It's
in
a
Goregaon.
studio in Goregaon, but the land parcel is what they're planning to develop and work on. So maybe 2,000 to 3,000 crore of GDV is what it'll add, and so the pipeline is very strong. Now this is a company which is 3,000 crore in terms of market cap. So adding another 3,000 crore of GDV, and they're saying that the launch pipeline is strong, and they're saying that they will continue to add projects as well, zero debt. So some interesting plays in real estate which are currently sitting out there. So
interesting.
Yeah.
Okay. What else, guys? There's just 2 or 3 updates. The carbon black companies are up because apparently one of the large global carbon black manufacturers is shutting capacity, if I'm not wrong, right?
Cutting the carbon units or something.
Yeah. There is there is one. So if you see, viewers, I think Philips Carbon Black is up about 6%. There are a few others which are down because Orion is going to shut down carbon black production lines by end of 2025. Orion is a specialty chemicals company, and this decision forms the part of a strategy to focus on to focus maintenance investments on higher performing production lines and rationalize underperforming assets.
Was this sorry, but was this announcement made earlier? Because I recall something similar had come out earlier, either in intention and now dates have come out, or is this completely new?
I haven't heard this earlier. So
Okay,
to me,
so,
this is new. If it is
possible.
earlier, then maybe it is there, but I don't know about it.
They're seeing impact on two companies currently, PCBL Chemicals and Himadri Specialty, since they are into this space. Both are buzzing on the back of this, right?
Yeah, they are.
So, yeah.
So therefore, that's the bunch of stocks which has done well too. And lastly,
There's Union Bank out of the blue.
why?
Growth nahi hai. Now I appreciate that the book is large for a Union Bank, 10 lakh crore in terms of advances and around 12.5 lakh crore in terms of deposits. But the growth within some of these PSU banks hasn't picked up. For some, maybe okay, but for others, like a Bank of India was okay, but a Union Bank, 3% degrowth on the deposit side, 3.5%, and 1% degrowth on the advances side. And when you look at the YOY numbers as well, it's not too impressive. 4% growth on deposits YOY, 7% growth on advances YOY. So where's the growth? I mean, if you have a good, clean cycle playing out, why aren't you growing fast enough? Really, that's the question which markets are asking them. Yeah. And if you want to command the kind of valuation that private sector banks do,
then you better show up.
Yeah, exactly. Then how can you grow at mid-single digit? That just doesn't work for the street. So that's negative, even inflation adjusted. So, I mean, just doesn't make sense, right? I'm sorry if this is coming out as too harsh, but it's just the way it is. You're a listed company. You ought to perform where growth is concerned. Well, that's not happening.
Perfect. Should we take questions?
Yeah, we can. Okay.
So let's start. So Vigeen Dharan, I have the questions. So Vigeen Dharan is asking, and I think this is with regards to the S. Naren chat that we had. So Vigeen is asking that, can we say that pharma and real estate are the most hated sectors right now? And based on Naren's opinion, good time to take contra bets on these sectors? Actually, no.
Real estate is
not the hated sector at all. In fact, I have some very interesting data which I must point out just before we move on to the next thing. And that is the multiples for some of these. So Nifty real estate, guys, 2020 was trading at 18 or 19 times. Nifty Realty currently trades at 53 times. It is a sector with the highest gap in the multiples in the last 5 years. So then there is FMCG, then there is IT, all of which have a fairly large gap in their multiples from 2020. And 2020 was a COVID year, but average 2020 multiples. So COVID mein kya bhag bhi gaya the market. So Nifty real estate has had the highest P multiple expansion from all the other sectors. So no, it's not a hated sector.
But understand 2-3 factors here as well. Debt levels have come off substantially, right? Which was always a big drag with regard to earnings. Second, the launch pipeline is extremely strong. So you're seeing very favorable tailwind. Anushi will explain that better than I do. And once execution starts to ramp up, that earnings multiple will shrink. And there is no reason why execution should not ramp up, because now under RERA, you need all your approvals before you launch. So therefore, if all your approvals, or rather predominant part of your approvals, are in place, there's no reason why the only reason why you don't execute is capital. But you have capital, you have your approvals. So what's going to stop you from executing is really the question.
Yeah, and most of these companies, that's why they're entering into JDS, joint development agreements, or light asset models, so they can keep their debt in check and focus more on the cash flow side of the picture, because that's where they are getting their multiples from. So it's the operating cash flows, the kind of growth that we are seeing. Even DLF, about 100% plus growth is what we are looking at. So these are all some of these factors which have aided, and of course the launch pipeline and the pre-sales growth that we've seen are some of the supporting factors as well.
So maybe justifiably so, it's trading at the kind of premium that it is.
And again, wouldn't it be fair to compare a 5 year, though the multiples have stacked up substantially, the cycle also, real estate cycle 5 years ago, it's like a 5 year, 7 year play that is happening. So wouldn't be a fair comparison on that basis? Correct me if I'm wrong on that. Yeah.
Is it a 5-7 year? Is the last 5 year
Maybe like
price
a
to
3
earnings
years.
the right
Yeah.
way to look at it? Because you were probably in a bad cycle,
Yeah.
COVID, and maybe a year or two thereafter, and then after that we've
The
really picked up
currently
in
we are in
terms
a
No,
of.
but we are taking a 5-year average, which would include the COVID lows and that thing after that also. So in
Correct.
some sense,
so 2-3 years of the growth that we are looking the upcycle. Yeah.
but the real estate space or any sector for that matter, right? I mean, since we are talking real estate, but when I was looking at the multiples market wide as well, 2020 to 24, the Nifty average P multiple is 24 times. 2011 to 20, the average multiple is 19 times. I think just the number of people chasing equities has brought average multiples higher, and people are okay with it now. I mean, who is to say that a 22 multiple is wrong, right? Because यहाँ पे एक demand supply का factor है. If there's more demand for a particular asset class, then it will continue to be priced higher, which is how an MF Hussain painting versus another painting. But अगर MF Hussain painting के लिए demand ज़्यादा है, it will continue to fetch higher value, even though to a rational mind they might say, no, the other painting is as good. Sorry, I'm a very crude example,
No,
but
of course.
something like that. But any case.
Interesting.
Interesting.
Personal jinx.
But
But yes, so sorry, I just read a couple of comments on KYC that kind of attracted my attention. Thanks, Hersh Mahima, for KYC on BLS International, holding since quite long. Well, MP Jain, completely our pleasure. Vigin, thanks for taking BLS International. Return ratios are good, but what do you think of competition and entry barriers? Vigin, yes, there's competition, but the size of the market is large and growing quickly, is what I understood from management as part of the interview itself. He said it'll grow at 14%. So when you have that kind of growth coming in on a base where you can erode your competitor slowly and steadily, and VFS could be one of those competitors which they can slowly chip on and not really needing to take sizable market from them. They can continue to grow as well. BLS can continue to grow as well, and the numbers which he's put out in terms of guidance, 15-20%, to me it looks reasonable. I don't think that it's completely unachievable. And of course this can't be a one player market, in my opinion. There has to be multiple players. So I believe entry barriers in this industry are strong, but once you've entered, someone like a BLS International should be able to continue to enjoy it. A VFS is already doing that, so that's just my sense. Yeah, but that's on this. Buffett emphasizing on having boring businesses in
you
your
missed some
portfolio.
of the questions earlier. So let's go that. Because Sadanand Sinha has also commended, by the way, this commendable job with BLS with crisp and quick questioning. And there's a thing about, can you please explain the active momentum fund Naren sir has mentioned, and then we'll come to textiles as well. But just very quickly on this, momentum investing is effectively, the strategy that says that things which have done well will continue to do well, whether it's a price trend or earnings growth. Agar wo acha hua hai, so it will continue to do well. So you ride that wave until it reverses. I mean, that's our technical analysis also is based on largely. Of course, I'm simplifying it too much, but that's what momentum investing is per se. Recent winners will continue to be winners because the momentum of their business is in their favor. Okay, textile stocks. Did we speak to a management after what happened yesterday with Bangladesh? No, we haven't. So I think most people said that let the duties come. At least the experts, Sudeep Bandyopadhyay and some others that we spoke to, said that let the duties get announced and finalized, and then we'll be able to take a call whether India is better off than Bangladesh or not. Until then, it's difficult to say.
Yeah. But that's on textiles.
And there's a question for Anushi.
Do we have more?
Yeah, we have more. So Anushi, there's a question for you. All combo is good in this setting. Okay, joint question to Niraj and Anushi, but Anushi, let's take it with you. That if IT sees a structural slowdown, the first big impact will be real estate in key cities with IT hub, mostly retail.
I don't see a big impact of IT on this personally. Because IT, if you're looking at, you are talking about companies like Anant Raj and all coming into effect, right? But
no, but Bengaluru companies, would they see a problem if the IT hiring slows down a bit?
There's already an article I read, by the way, on the fact that PGs have started losing business because IT hiring is either very slow or is actually degrowing at this point. So certain paying guest related
This
businesses
is a
are.
1-2 year of a scenario that we are already pointing out. This story has been there before the IT slowdown that we are looking at. Considering that if you just look at Bangalore market, Prestige, Brigade, all of these players are in that space. And they have continuously pointed out that the demand momentum over there also continues to remain strong. So I don't see much of an impact. I might be wrong on my analysis on that front, but yeah.
Okay, but so a few moving parts here, right? As of now, it doesn't look like that, but
Yeah.
could this be the first sign that if PGs have gone low, then is the demand coming off? If the demand is coming off, would it only impact the extremely base level workers, and therefore, if it doesn't impact mid tier or higher tier workers, then maybe real estate demand will continue to remain okay. Maybe that is the case. Who knows? So, शायद PG का demand कम हो
I'm
जाए.
just checking whether that PG.
But अगर PG है तो base level,
They've
base
seen
income.
significant slowdown in
Yeah.
many areas.
Yeah,
Outright decline in 2025. Falling demand, financial strain, additional pressure,
Entry level job.
broader real estate impact is what they're seeing, and it's all IT related.
Yeah, but entry level jobs.
Entry
If it's
level.
PG.
Yes.
If it's PG,
Yes.
just saying.
But these are okay. These are like the big luxury players also that we are talking about. So
Maybe not
impact
as
on
much.
yeah.
And price has risen quite a bit, especially in the Bangalore market. Like what I was gathering from people there, prices have really shot up in the Bangalore market. So maybe that is the other.
Okay.
This is a consequence of maybe that as well.
Now we'll do rapid fire. Last 4 minutes left. Tejas Gambhir is asking, good noon. Here's a situation. Say you have 10 lakhs to invest, a third of your total corpus. Which top 5 sectors would you go for, excluding banks and NBFCs? Okay, my call is, of course, NBFCs because I really like NBFCs per se. But okay, which 5 sectors? I don't know about 5 sectors. Any other sectors that you guys have heard recently, people being constructive on?
Power transmission and distribution.
Yeah, so T&D.
Yeah.
Even Naren said energy transition looks
Yeah.
okay. So that is good. What else?
I think real estate looks good even now.
Okay. Sorry, yeah, NBFCs do look good. So
Yeah, NBFCs
that's
do look
3 right now. Otherwise, a lot of things are expensive, so you got to be a bit careful. Okay, Eureka Forbes, do you think Lunox, which is the PE firm, being a promoter might be a problem if you invest now, as and when they exit, the promoter as well as the business strategy might change? I don't know.
I'm checking how large they are.
Yeah, they must be large because this guy is saying it's the promoter. I don't have a handle on this person, but I would presume that if they've hired Pratik Pota and paid him whatever bucks they would have to rationalize the strategy over the last 3 years or 2 years or whatever it is, they have a longer term vision in mind maybe. Plus, I don't think Eureka Forbes valuations are so high it'll tempt the PE firm to do it. But Roshan, you might be right on this. I mean, we do not have, I'm sure none of us have insights into when is it that Lunox might be wanting to sell.
Lunalox owns around 60 or nearly 63% of Eureka, so it's quite large. I'm not sure, and they have sold in the past as well. They've sold around 10% from the peak. From 73, they've come down to 63. So just kind of flagging both of those off.
Yeah. Okay, final question. It's all about the fun saying. You took Shrika Reddy's question on BLS, right?
Yes.
Okay. So it's all about the fun is saying things not to learn from RJ, not emphasizing on health, putting all eggs in one basket. What else?
No, Shrika Reddy, I have to still take. I'll take it after you.
Okay. Putting all eggs in one basket may not necessarily be a bad idea if you know the egg very well, frankly. If you diversify too much also, you will probably not see portfolio gains. But yeah, the idea of diversification these days of the last 1-2 years has been there's so much happening in the world that you don't know which of your stocks might get hit. And therefore you want to diversify risk, which is a great strategy currently. Otherwise, if you know a business really well, don't follow the mantra of a mutual fund manager saying that we only kept up to 4% in a particular stock. Because if you know that business really well, and you can track it well and you believe in the growth, then it might be good to have an outsized position there. But you should know it very, very well, and there should be a surprise which will hit your portfolio really badly. So that's the thing. What else, guys?
Yeah, this BLS, Shikhar says that 26% of the business is from North America. What will be the impact of recent changes in government policy on visas from US, Canada on BLS? Shikhar, frankly speaking, low visibility with regard to what the exact impact will be, because we didn't ask that question to management. But what I would reckon is that, see, business doesn't go away, right? Yes, there is a change in policy. Business will continue to flow. to BLS because there are still enough people wanting to go to America, including Niraj sir, and North
No, I'm
America.
done. I'm done with US. Plus, Buffett is not coming next year, so it's okay.
So yes, so you'll continue to have a good customer base, and of course these policies keep changing frequently. The point or the fact of the matter is that you have a large market, you have a recurring business. Yes, maybe one geography may get tweaked, maybe another geography may spike. So the sense is that I don't believe it's as large as one would fathom. At least that's the way I think of it. But of course, we'll look at Q1 FY26 commentary. Maybe something comes out from there. And maybe I'll text management as well. Maybe they can give me some insights on North America.
Okay. Should we wrap, guys? 12:35.
Okay. Yes.
Thank you so much for tuning in today, guys, everybody, and see you tomorrow.
Thank you.